And we're going to talk about emerging markets, quickly about Uber, General Electric, banks, stress test. We had the meeting of European prime ministers, a little bit of about small caps, oil, and what's coming this week. So let's start with the emerging markets a little bit. Again, a lot of stress on the market. We had the latest with Argentina, the Indian rupee. Argentina stock at some point went down 10%, FX, consumer confidence going down. So it's a lot of noise in emerging markets, and it continued through the week in Brazil, India, in all many of the countries. So as I said earlier, I think at some point we're going to have a relief rally. Actually, we had some in Mexico on Friday. The stock market was up 1.5%. Same was the currency. But I'm still afraid to go long. I mean, I see that this trend of raising rates, a more hawkish um, Federal Reserve, also some numbers in the European Central Bank. We had for the first time inflation headline at 2% in Europe. Then after the headline, it was less so, but for the first time, the target that the European Central Bank had. So clearly, there is some tension there in emerging markets. Again, I'm thinking we're going to have a rally. We're going to look for that, but we don't see it coming now. And same, we along these, we keep this yin yang with the tariffs and President Trump. It comes and goes, it comes and goes. Remember something, it can be solved in 1 second. If President Trump wakes up tomorrow and says, well, you know what, I talked to Mr. Xi Jinping and we're good, we're going to give some more time and we're going to discuss, and nothing happens, the market is going to have a massive rally. Or if they keep fighting, the market is going to be very volatile. But what I'm saying, this is a very executive decision. Does not depend on the Congress. The president can slam tariffs on anybody he wants, and likewise, the Europeans and the Chinese can do the same. So that's kind of the thing that it keeps the markets for now. We like it. We're a little bit slowly more concerned. Rates are going up. So there is some signs. The economy is still doing very well in the U.S. There is a good pickups in Europe. However, at these rates, there is some signs in real estate markets and some other markets that these rates are starting to be felt. So we are not super aggressive. We like it. We stay where we are. Uber got approval to go back to the United Kingdom for 15-month probation. So good news for the company that we like a lot. It's not publicly traded, but clearly a good news. GE, like grandma, is selling the best jewels that they own. They're selling the healthcare division. Remember, they have healthcare, which is basically not healthcare, but it's health machinery, CAT scans and sonograms and all those machines that you see that do funky stuff. So basically, it's mainly radiology or some other things. Jet engines, which is key, and then power, in which power they are focusing on renewables, which is very small because in their traditional power, which they were the leaders, people like Siemens and ABB are much better than them. So anyway, they're selling the best that they have, one of the best units. So more and more they are getting stuck with the stuff that is okay. I mean, the jet engines is still great, and they say we're going to focus on our core. But by selling their health unit, which is a leading company in the world, it's again, you're selling grandma's jewels. So that was the news. Banks stress test, we had that. Everybody passed. Everybody basically can do whatever they want, with the exception of Goldman and Morgan Stanley. They say, you guys, you can keep doing dividends, but no more than you have. You have to build more capital. The sources of your funding is not as reliable as the commercial banks. And because you engage in so much market making and other activities, we want you to have a bigger buffer. So you can pay what you have for now, but not more than that. And then Deutsche Bank, the US unit, failed, no surprise, quoting, lack of proper controls. We have a meeting of the European Union's prime ministers on Thursday. It went very late, but basically they listened to Italy, which has been saying, hey, I'm getting all the refugees and they'll stay here. This is creating a massive social and economic problem for us, and this is a common policy. So they had agreed, okay, we're going to take the refugees and we're going to spread them out into different countries in Europe. Wait until you see the same problem that the United States, families being separated. One guy is being in the Czech Republic, the other guy is being in Spain, and everybody's going to be crazy about that. But that's what they're doing. A little bit there, the IWM, or the Russell 2000 is up 7% for the year, while the S&P is only 2%. Why? mainly because the Russell and the small caps are way less affected by the dollar and the tariffs. I mean, if you look at the S&P 500, depends on the company, but at least a third of the revenues and the profits comes from abroad. These are very international companies: Apple, Microsoft, Intel. We all know that. If you go to the 2000, because of the size, is basically small and medium cap companies. There are restaurants, regional banks, little retailers that have little exposure. So investors have shifted into that. We're going to do something similar in our next asset allocation. We're going to put a little bit of into that IWM, so you have still the equity exposure that you want, but with a little bit more of a domestic bend. So we'll look into that. Oil at a not all-time high, but a multi-year high. Good numbers there. Up the low 70s on this OPEP sort of finesse everything work according to plan. Everybody's happy, etc. So that did it. We have stability for now. And then what is coming next week? First, today we have elections in Mexico. Andres Manuel Lopez Obrador, or AMLO, is expected to win, a candidate of the left. We think this might be a surprise to buy and make money. We'll wait, but I think it might be a surprise. A lot of fear, a lot of story. This guy has been a forever candidate. It reminds me exactly of Lula da Silva. He was a forever candidate, the fear of everybody, a guy from the very left. When he came to power, it was the best 10 years of investing in Brazil. Watch out. Mexico's been a great country, but investing there has not been very good. I mean, the market doesn't offer a lot of opportunities. They've done very well, but there is not enough diversification. We look into that and we kind of always sort of miss it. We'll look into that. It might be a great opportunity. Stay tuned. And then remember, 4th of July weekend on Wednesday. Market will close at noon on Tuesday. We'll be all celebrating barbecuing for the 4th of July. And then key, we have labor report on Friday. The market expects 185,000. Maybe was 223. So we'll see. Very important to see how the Fed does. And speaking of that, the Fed, we'll see. We'll have the minutes of the meeting that will be on Thursday. That the meeting that we had when they raised rates. It's key because we see a Jerome Powell that is more hawkish. It's more like, I cannot wait for the data. With the data that I have now, I have to act. This economy is at full steam, full employment, no unemployment, and very, very soon when we'll have a spike in wage inflation, I want to act before it happens. So that's more hawkish that we'll have in Janet Yellen. Also, that's all in the call. Also, visit our new webpage, winston.capital, register. You will have access to all our material if you're a subscriber. And if you're not, you can see we have some free stuff there in English and in Spanish. We do it both ways. And again, for our subscribers, we'll connect every day at 10 a.m. New York time. Thank you very much. Have a great week.